Good evening, Namaste members. I welcome you all for this half-day seminar on the topic Importance and Elements of Audit Planning. To develop upon this subject, we have with us CA Jain. May I call upon CA Basuraj VK to escort the speaker onto dais and welcome him with a floral bouquet. Thank you, Basuraj sir. I have privilege in introducing CA Jain. CA Jain is partnered with Audit and Assurance Practice. He operates out of Bangalore office and has over 12 plus years of experience providing financial statement audit, accounting advisory, auditing advisory and cross-border offering services. He specializes in providing audit and technical accounting advisory to assessed and non-assessed clients. Prior to joining MSKA, he has worked in various roles with India office and other large accounting firms. His experience cuts across various industry across sectors with a specialization in statutory audit, limited review, inter-office reporting and tax audit of companies in operating, manufacturing, hospitality and technology industry. Hers has experience of working on multi-GAAPs, US GAAPs, Ind AS, IFRS, which includes collaboration with auditors from other geographies. Areas of expertise: financial statement audit, cross-border group engagement, tax audit, industry expertise, manufacturing, technology, hospitality. He is a chartered accountant since 2012. He is also a Bachelor of Commerce. With this brief introduction, I present before you CA Jain. Over to you, sir.
Hi, good evening everyone. So thank you for the introduction. So again, a brief recap. My name is Jain. I work with MSK and Associates, which is international member firm of Video International. I specialize in audit and assurance services. So today the topic here that we will discuss is importance and elements of EI. So we'll try and keep the session interactive so that we can share our knowledge, and I'll also be able to add value to you and take some inputs from you for the betterment. So here in this slides coming forward, we will first have a discussion on why planning of an audit is important and what are the elements that we should consider when we do the planning. So as it says, one size doesn't fit all. So with all the companies, we cannot have a same plan and we cannot expect it to be to fit everyone, right? Or audit planning is not a simple process, and audit planning is an important step which determines how our audit will be. With a proper planning, it is said that 60% of audit is audit planning. If we plan the audit well, we will be able to assess the timing, better plan the resources, and also the team composition along with the expertise that is required by the team. And we will also be able to better manage the risk. And in today's world, as you know, risk identification and addressing risk is the key element in audit. In line with ISA, SA also is moving towards risk-based audit and has already started, where firms have started adopting risk-based audit approach, where moving away from the traditional audit where it was based on coverage and scoping in all areas which were material. Now the audit relates more to identifying the risk and how do we address it. So in this audit planning, it involves consideration of industry we have to decide first on what our scope is, where what all we need to cover in a statutory audit. Now we will have to go back, evaluate whether there is IFC applicability, whether there is CARO applicability, what are the accounting frameworks, since whether it's an IGAP account or Ind AS accounts, and then we need to also oversee what are the laws and regulations applicable to the client, because that again defines how our audit has to be. If there are specific regulations and laws applicable which can be in case of NBFCs, banks or any regulated industries, and in fact now with the new regulator, or I should say NAFRA applicability, the audit and the procedures what are required are being more defined by them, and there are been a lot of guidance and clarifications issued by them to this impact. So here, so usually what happens is the use of same as last year. Now that mentality needs to change. Mentality, it can be a major pitfall in an audit. The same as last year disregards the advantage of planning, the thought process, focuses instead of getting the job done quickly rather than the thought process and how to address the key areas. The aspect of scoping, like the slide represents, it includes preparation of budget and giving their desired roles and responsibilities to the team, deciding the team mix, what suits best based on the experience in the specific industry, specific client domain. Then we have to check on the applicability of CARO, IFC and what accounting framework are. Then we should also in scoping assess what are the key accounting matters, and now with growing complications in clients, majorly with the ESOP and the valuations involved, the share issues and whatever you can imagine. So where at times we are not qualified enough or qualified in that particular domain to opine on. There we need to involve some specialists to get reasonable assurance on what the valuations, or where now in fact in IT audit as well, where we have to comment upon audit trail and the ITGC, the data backup for client, so which may not be our domain, for which we may need an expert with IT knowledge to opine on. So those are again matters which we need to discuss and evaluate while planning an audit. And in today's world, the communication with various stakeholders has become a key, where you see the standards also require us to communicate with client about our audit plan, how we are strategizing the audit, what risk have we identified and what procedures are we doing to address it. Even in listed entities, you see we have key matters CAM that we report on, that what was the key matters that we came up with and what procedures we did to address that. So all these together are the aspects of scoping to make an audit a successful one and ensuring that we have all the required coverage. So moving on now, what are the key elements that we have to see when we are planning an audit? So one of the key and the base element that comes is materiality. Now materiality is key for an audit, key for what coverage we need to have, and what will be the nature extent of our procedures that we will be performing. Which areas will be our focus areas along with the risk identified, what can be the magnitude and the impact of those risks, all depends upon the materiality that we identified. Use of materiality in audit is to determining the nature, timing extent of risk assessment procedure. It helps in assessing the risk of material misstatement, helps in determining the nature, extent, and timing of the audit procedures to gather sufficient appropriate audit evidence. It helps in us of finalizing or forming an opinion on the financial statement. Based on materiality, we need to decide if there is any modification required for any misstatement that we have identified. So, with materiality in mind, we know what can change the opinion of a user. So, this becomes important in assessing how we decide on materiality. And how do we decide on materiality? If anyone wants to pitch in and share some inputs. Okay. So there are multiple benchmarks that can be used to determine materiality. Materiality is initially decided at financial statement level and then is broken up to financial statement areas and transaction level. So in companies, the most used or recommended benchmark is income before taxes, where a company is consistent in having profit over the years and there is no irrational or there is no inconsistent profits. Income before taxes are the most preferred and required way. Why? Because in most companies, the objective of the management or the vision of the management is to earn profit, right? And that's where the users of the financial statements or stakeholders assess the company by. So that is one of the first benchmark. When the income is consistently stable, we can use that. There is guidance, and as the standard of audit also explains, there is a percentage to this benchmark which can range from 3% to 10% of your net profit before tax that can be used. In some companies which are in the growth phase or the intention or the vision of management is to expand their business and they are not focused on profit, their revenue becomes a benchmark that can be used for determining the materiality. In similar way, there are investment trust or investment entities where the total assets are the key drivers of the company. So where their total assets can be used as the benchmark. And last is net assets. Again, net assets comes in where in current times, if you see, this is one of the most relevant benchmark because most of the startups now are focused, they are not stable in their revenue, they are in the growth stage, profit is a long way off right now. So, and their books usually represents the fund they have raised, how they have invested it and how they are going about their business. So in these development stage enterprises where profit is again unstable, materiality is set up at net assets level. And like I discussed, for materiality at financial statement level is called materiality or overall materiality. Then it is broken up as a percentage of overall materiality at performance materiality, which is a materiality less than overall materiality, but at a financial statement area level. It's not at a financial statement level, but a little lower than that at their areas level. And then there is clearly trivial or the lowest materiality, which is for transactions, to see whether they have any material misstatement or not and what can be ignored. So clearly trivial is the base level below which usually as an auditor it doesn't concern us. So use of different materiality like we discussed. So performance materiality can be used for deciding the nature and extent of procedures that we'll do for some specific financial areas. the risk identification and assessment for each areas. Then we have the materiality which we use for evaluation of our opinion, whether any misstatement is material enough to change our opinion and there needs a modification. That overall materiality helps. Clearly trivial is again the lower one. There are other materialities as well now with the group audit and the recent, or I should say the previous year, the clarification which was issued by NAFRA, where the scope of auditor extends to even the subsidiary companies as well. And we may put a para saying in our audit report calling out other auditors doing their audit of entity, but as principal auditors or the group auditors, we have to own it up, is what the clarification from NAFRA says. And it's not a change in the standard, but the interpretation is a clarification issued by them that it is the responsibility of the principal auditor. So there we have materiality which we can break it up in a group audit for the components, and even in a standalone audit if there are multiple branches it can be used. So these are the kind of different uses of materialities which is there. Now in planning and audit, so one of the key changes now which has happened in recent past or in last few years is moving to a risk-based audit from the traditional audit. What is risk-based audit? Now the audit is not governed by only the materiality and what areas get scoped in based on materiality. In fact, now even the ISA and standards of auditing both requires us to carry out our audit in a specific way where we identify risk and perform procedures to address those. So this is a significant change which I think came a couple of years back, which has changed the mentality with which audit is done. Now there can be areas where you don't identify a risk. We do some procedures and move on, but risk identification has to be the most important step in your audit, and it is a journey. It cannot stop anywhere. Once we finalize audit plan also, it doesn't mean our audit plan cannot change or we don't think from the perspective of any risk identification or improvement in our audit itself is a complete journey now. So here the SA 315, identifying and assessing the risk of material misstatement through the entity and its environment. So the standard now requires us to do a separate evaluation of inherent risk and control risk, and also introduce factors such as subjectivity, complexity, uncertainty, change, and susceptible to management due to management bias or fraud. So these are the key parameters which have been introduced now, through which we need to use to identify our risk. What are the inherent risks? Every business has an inherent risk. Now what will be the magnitude of it decides whether it makes to our audit plan and how we address it. So the risk identification is one of the key elements of audit planning, and whole audit depends upon how we plan, identify risk and then plan procedures to address it. Now let's talk about the audit approach. Again, we spoke about scoping. Scoping is the scope of engagement that we have, what is our reporting duties and which laws and regulations are applicable to them. So then we have to identify the risk, what are the inherent risks and the control risk with the company that we can identify, understand their business, the cycles, the processes, and the information system. Now this is also again a key part of our work, to understand the information system of the companies. Then understand the entity, its environment and its financial reporting framework. So understanding the entity, I think, includes the details about or the factors which can impact the entity. It can be at a macro level or it can be at a micro level. All these factors we need to understand. We need to understand how the management of company is, how experienced they are, how capable they are to run the company, whether there is again any specific laws applicable to them, whether their control environments are defined, where there is segregation of duty, where things are happening in a professional way or not. So those all come under understanding the entity and its environment. Then the last part of it is understand the internal control. Now understanding the internal control again helps us in both ways. One, if we have IFC applicable to the client, we will have to carry out control testing, get an understanding of their internal control, because we have to opine on design and operating effectiveness of the controls. So which again circles back to understanding the internal controls of the company. And also internal controls give an idea about the risk which is there and what can be identified. In companies where we see there are too many controls regarding one cycle or in one cycle, we know that there is a challenge there where company sees it as a risk area. That's why they have put multiple controls there to ensure that things happen as they happen. So that again, from an auditor point of view, gives us a sneak into their operations that yeah, this area can be risk-prone area, or there can be things going wrong where we need to be careful. There can be errors happening which the company identifies, and that's why they have additional controls there. And perform stand-back procedures. What does stand-back procedures means? That once we are almost through with our planning and we have identified risk, we have considered areas where we need to perform our audit, we just have a look back. Like stand back means is again having a review of the procedures that has been designed and whether we have missed out on anything, whether all critical areas have been covered or not. It's just a sanity check that we do, whether something has not been missed, right? To get a confirmation that this is aligned and we are in agreement with the plan that has been finalized. So in this, we assess risk in the planning with all these factors, and then we respond to risk. So respond to risk is again deciding on what procedures we will do. This will in fact, once we are done with this leads to us to the next stage, which is the third stage of obtaining evidence, where the execution comes in. So till the first two stages are the planning stage, and technically in an audit to be well timed, risk managed, and we're having a proper team composition, the time spent on planning is generally an investment, which results in an audit where the all the hard work that we have to do is aligned and going towards the direction that we want it to. Now we'll touch base on the other identification of potential IRM, that is inherent risk of material misstatement, basically, and one of the most critical step of audit planning. How do we identify risk? So there are multiple ways in audit planning how do we identify risk. One of which, or few of which, are understanding the entity. Once you understand the entity, you know what their challenges are, which industry they are operating in, what can be the regulations applicable, whether there are any non-compliance of any law, whether the environment they are, industry they are operating in, whether that is prone to frauds or errors there and is a risky entity. Usually industries, there are few industries which are always high on risk. Those are say maybe a real estate industry, maybe a company dealing with gold, where it can be at a higher risk entity for us. So these understanding what we gain about the entity is the first part. We will talk in detail about all these steps in further slides. I'll just run you through the names first and then we'll pick up on each section. Second is preliminary analytical review. So preliminary analytical review is the initial draft financials that we get or books of accounts that we get. We do a comparative assessment with previous year and see where the spikes are, where the movements are, what looks unusual to us, to identify those as the area that we need to focus on, right? If there is a sudden spike in some FSA, financial statement area, say a trade receivable balance, from previous year to current year it doesn't match, there is a very weird spike there or reduction there, obviously it will attract our attention. So basically preliminary analytical review is not going to the client but by doing a self-study of their current books that they have given to us or the financial statement that are made available to us with the previous financials and making a sense out of numbers what is happening. So that is preliminary analytical review. Then the next two are understanding their entity level controls and activity level controls. Apart from that, we have information system understanding, and the last but not the least is your engagement team discussions, which again is a very critical step and we will discuss about it in further slides. With this, we will be able or in a position by doing all this work to understand what the risk, how much risk do we identify, what are the potential RMMs. Now, once we decide on potential RMM, is not a conclusion that these are the risks. You are identifying that these can be a risk, right? It's just a potential RMM. It's not a risk of material misstatement, but it can become a. There is. We will talk about it as well. How do we conclude on the potential RMMs, whether those are RMM and what level of RMM they are. So in the further slides. Now going through these 5 or 6 ways of identifying potential RMM. First one, like obtaining the understanding of the entity. Like I told previously, there are different ways documented here, which we can see the visit to client premises that gives us an idea how things are going. Review of their minutes, those board minutes and other committee minutes gives a good understanding of how business is going or what are the changes happening in the company, whether they are scaling up, they are investing in new things, or how they are planning to run their business, because the minutes gives an idea about the future that even the board or the stakeholders are looking at, how in which direction they want to move the company. There can be discussion with staff and the management of the company. There can be discussions with experts that company use. Maybe for a litigation they are using some consultant or a lawyer. They have their own internal auditors. They have their actuaries and other experts. Those are involved there. Apart from that, internal auditors reports, if internal audit is applicable to them, that gives a good insight about what areas they have reviewed and what is the observations they have come up with. So that is also important, and most important is observation. What do we observe? When that again adds up to everything. You go to a client place, how work is happening, what is the tone of the client, what is the tone on the top, how the management thinks. It's always a trickle down approach where the tone of the management decides how a company operates. And that runs through even the largest of the organization, if you see, without naming, but you can think of a couple of names and you know how that organization would be functioning. So that's the tone on the top, and how that all comes with the observation of how diligently or how professionally they are doing their work. So this is the first step of obtaining an understanding of the entity, which can give you a lot of insights and lead you to certain potential RMM, which you can later evaluate how material they are. So PAR again, like we discussed, so when we carry out a preliminary analytical review using client information, we can direct our attention towards financial areas that may be materially misstated and where we need to focus or put additional focus in our audit. These help us to identify FSAs, financial statement areas. We may be able to conclude that there is no further work required. Say any investment a company has, a non-current investment, similar to previous year, there is no change. Share capital, there is no change. So we know those areas, again, we don't have to focus too much on those. It indicates aspects of entity which we are unaware. Now, with looking at the numbers and doing our analysis, we can again analyze a lot of things, whether the profits have gone up, gone down, whether the ratios are matching or not, or whether things are similar to previous year or not, or there is a change, right? There can be new FSAs which come up. There can be a new ESOP scheme that has been introduced, and ESOP accounting has been done. You see a new balance of ESOP. You see new investments there. There can be a lot of other things that we may not be initially aware, but with numbers we can assess and come to know. And these PAR, like I said, is early warning of the company's current status or areas that we have to focus. Similarly, it can be an early warning for us to assess whether there are any liquidity problem which may form a prejudice of appropriateness of going concern, where company may be having a negative net worth or huge loss due to some unknown event, which can lead to a going concern assumption risk, and we may have to evaluate it accordingly. So these are the key aspects which PAR adds on to and gives us insights about the company to identify potential RMM. The next part is relating to control. Control is a very wide term, to be honest, and where first at an entity level we have to not only see what the controls are, but these are more towards how the whole company is functioning. You have to see the control environment, you have to see how company is assessing their risk, right? And what is the communication amongst the company or our company as a whole with its employees, and the monitoring, whether there is proper monitoring of these activities. So all these together then comes up the control activities which are relevant to audit, CARA as we call it. And here is where our design assessment and operating effectiveness comes in, where we have to check. So in control environment, a well-controlled company, or a company having a very good control environment where segregation of duty is there, there are professionals or qualified people running the show. It gives the auditor a reasonable level of comfort, right? That things are happening in line with the requirement, or at least the expectation or the work that the company is doing is aligned. So this is entity level control. Entity level controls is usually controls at a higher level which are persuasive to all areas. It doesn't restrict to one financial area or any one activity. Say, to give one of the most basic example is a monthly review of MIS. that is one of the what do you call entity level control. The board meetings, regular board meetings where there is discussion on company's performance, or in fact even the audit committees which are, so that is a level of control where they see the results and they ask questions and then corrective measures are taken. So these are few examples of entity level controls which is persuasive not to the entire financial statement and doesn't stop at a financial statement area level. Then the next part of it is control activities which are at the activity level, which are limited to a one cycle. Say your controls related to revenue, it may be related to revenue cycle only. It doesn't impact other cycles. There can be controls related to your cash and bank cycle, which doesn't trickle down to other. So these are activity level controls that are there, and these are the critical ones as well, because for each area now, as per IFC requirement also, we have to evaluate and opine on, right? So we have to see these, and these are where you identify any controls which are not operating as desired, leading to any misstatement, process which needs to be run in a particular way may not be running due to the operating efficiency of these controls. So these are the related control activities which are at activity level. Say approving an invoice, right? A sales invoice approved, made by someone, approved by someone based on whether the rates used are correct, whether the credit terms are correct, or he is authorized to approve it. So these are activity level controls which may not impact the whole financial but impacts a particular area. So the last part of this is understand the elements of IT environment, and like we said, now the ERPs and the applications used by the companies are getting complex. We have definitely moved away from or the use of traditional ERPs have gone down, or accounting applications have gone down. Companies are now using a ERP which is more of a CRM, and all cycles can be covered by one particular software. For different separate functions, they have different softwares which again integrate with the main ERP, and now all information that is being produced or given to us is mostly out of these ERPs and applications. So as an auditor, can we rely on it is the first question. Whether the data flow is happening as it has, it is evaluated or it is required to, right? Whether the interfaces are working properly. The integration of, say, an inventory application with the main ERP is correct or not. The information flowing is correct or not. And there can be other threats now as well with respect to cyber security or any security incident, right? Where, or if the company is moving from one ERP to another, whether the transition has been correct or not, or the data as of the closing day moving to the next day in the new ERP is correct or not. So these are complex things, right? And we as a auditor, we at times may be handicapped and we are not the experts to opine on this. And this again is a serious area now with the complicated applications, the number of applications and the ERPs that are there. And if you see the standards of auditing is also making it mandatory for us to evaluate these, the ITGC, IT general controls, the reporting requirements as requires us to opine on the audit trail, right? Whether that is there in the ERP, whether it is enabled, whether it has operated throughout the year, whether there has been any tampering done to audit trail records, and now from current year whether there is proper retention of records, right, which is required. So these is again in audit planning, if you evaluate in and beforehand you know what is required, you can involve experts which are who is required to be involved in this. Whether those backups are taken on a regular basis and are stored on a server which is in India, and the company has a requirement to give the address of these servers also to ROC. So there is, the IT environment is becoming complex, and with all these automated controls which are there, where only exceptions are highlighted by ERP. Depreciation calculation is happening in the back end by ERP. Interest calculation is happening by them. The inventory costing is happening by ERP. So as an auditor, we can't blindly say that if ERP is doing it, it has to be correct. There is input provided to ERP, there is integration done, what the data flow has been, whether the required inputs are going or not. And as a test now, in most cases, if you see the information produced by the company, which is any listing, any ledger, or even say an aging report for your trade receivables, those needs to be validated. Apart from doing the general completeness test of whether it is matching to the FS or not, we have to do more, right? We have to understand those applications better. We have to understand how is this functioning, and whether there is any loophole there, or whether there is some improper integration or improper instructions given from behind, where the ERP is not able to perform as it should. So as an auditor now, it's our responsibility, because your whole accounting is on ERP. Whole information that is coming is from ERP. So how do we test that? So we see that definitely in the first year it's a more critical task to understand those. Then from next year it's more about understanding whether there are any changes and then topping up our work accordingly. But first year requires a lot more investment in this particular activity, because this is something new which is coming up. We all are learning. We all are not an expert in this field. But yeah, this is a requirement that we have to meet and understand how it works. So this is a key step in audit planning, to understand the IT environment of the company, how the data flows and how the network structures are, what are the applications used, which applications form books of accounts. Now, in fact, in audit trail reporting, it talks about books of accounts. It's not usually only the accounting application that forms books of account. There can be other applications supporting that accounting application which also forms books of accounts. Say an invoice is being raised in another software which is again integrated to your main ERP. That also forms books of accounts. Even for payroll, if whole processing and data saving is on another software which again is integrated with your books of with your main ERP, or maybe the data from there is uploaded in this ERP. That also comes in the definition of books of accounts. So that is a very wide definition for books of accounts that has been issued. So to understand those, we have to see which applications needs to be scoped in, which we need to evaluate, and which we can ignore where it doesn't form part of the books of accounts. So that's about the IT environment. The next point is engagement team discussion. So why is engagement team discussion important, and why do we need to do that? There can be multiple people working on an assignment. There can be people doing different areas. It is important that all get together and discuss those areas, because something which have come to their knowledge may not be too relevant for them, but it can be relevant for someone else who's doing some different area. right? There can be more with knowledge sharing, and in fact when seniors are involved, the qualifieds and the partners, they can add value to it. They can share their experience, they can bring the industry experience, they can guide their articles and juniors on these. So this whole becomes a very important step for which is called the engagement team discussion. Here, this is again required by standards of auditing as well, to communicate and share knowledge. This helps in assessing the identified risk, which can be the likelihood, the magnitude, and again the spectrum of inherent risk, like the five factors that we mentioned earlier: subjectivity, complexity, the management bias, change, and again what I think I'm forgetting. So 5 or 6 of those. So assessing those and reaching a conclusion, which is important, which risk becomes a significant risk or an elevated risk, or is a normal risk, or maybe it's not a risk, right? We just had highlighted it before, but conclusion can be different. ETD helps for the collective professional judgment of a team. It again helps in designing the response to these risks, which has been identified, and definitely with involvement of seniors, it helps enormous value with their experience and their maybe past knowledge of the client, which helps in designing the plan for the audit. So now, after doing all this, we have identified the IRMMs, potential IRMMs. Now, what are different types of IRMM, and which are the critical ones? So, IRMMs, as per auditing standards, are of 4 categories basically. Like highlighted in red, the highest risk ones are the significant IRMMs, where the likelihood and the magnitude of these potential IRMMs or the impact they can have on a financial statement is very high, right? Below that is elevated level. Below that is again moderate level, which may not be or can be identified as a normal risk as well. And there can be few IRMMs which initially as a team we identify, and then later once the discussions or further evaluation happens and we conclude that these are not a risk, right? It can be a low risk or it can be even no risk. So these are the levels of IRMMs, and based on how we conclude on these depends on what procedures we will plan for an audit. There are 2 default fraud risk or significant risk that the standards of auditing only gives us. That is management override of control and risk of revenue, where it is also classified as a fraud risk for evaluation, and it is a significant risk area. So considering how you evaluate all those factors and you classify the IRMMs, then based on this you will determine the extent of procedures that you will carry out to get a reasonable assurance on those financial statement areas, which can help in your conclusion of a audit in the most appropriate way, right? So how do we respond to these risks is the final and the most critical part. Again, after identification of these IRMMs, we need to address those as well, right, through our work. What execution or what procedures we will do, which approach we will take. There are multiple ways to approach an audit or do procedures which can give us comfort. So with more and more technology that is coming into play, you can see there are, apart from the traditional OSP, that is substantive procedures that we do, test of details, proofs and all, there is POC that is becoming a critical part, of our response to those risks. Then you have, apart from that, you have substantive analytical procedures also, where it's again complex work that is done. But yeah, that is also one of the way where if you have independent and concrete information which is generally available from experts for some certain industry, to give you an example, say in the hospitality industry, there are independent experts who release reports, and where, say for a certain hotel, you get a report of same level hotels in their area, what is the occupancy rate there, what is their room rents, so for you to draw comparison and do analysis whether your client is in the right direction. Chemical industry, you know the market price of certain chemicals which are available in the open on the internet, and there are experts also releasing those information. Helps you to compare cement industry, what is the economical consumption, what has been the growth rate or what has been the production, what has been the price movement. So those gives you enough information to do certain independent analysis which can give you comfort on those risks which you have identified, and on the financial statement balances which are there related to those risks. Last is now one of the, again, with technology, data analytics test, DAX. So this again is growing. This is maybe what we can call in few years or maybe half a decade down the line, future where our data analytic test becomes the key procedures that is carried out by us as an auditor. These are mostly related to analytics that is done by systems and the AIs. You put the information there, and whatever analysis you want, whatever comparisons you want, where there is any inconsistencies, those data analytics can help with. So as per the guidelines, what are allowed, which procedures we can do? Can we do only TOC? The answer is no. TOC can be one of the ways to respond to a risk, but it cannot be the only way. It has to be clubbed with either your other substantive procedures, your substantive analytical procedures, or your data analytics. If you see in the first three bars, TOC is clubbed with all those some other procedures because it independently cannot give you the comfort. The standards don't accept it. With OSPs, substantive procedures, other substantive procedures, that can, again, you see it can be there. It can be the only procedures that we carry out, and traditionally we have been doing that, right? Before these IFC and controls came in, it was only OSPs that were done technically. And if you also see, there is where there is moderate or low risk, your data analytics procedure can alone suffice as well. But yeah, so in other areas you have to do a mix and match of all these types of tests to get a comfort and to issue a opinion, and also get a comfort over the risk identified and the related FSAs. So what should we test via TOC, test of controls, is how often it is performed. There is a guidance from our institute as well on this IFC, which again is a mirror of these, the controls. What are the level of control risk identified that leads us to how much reliance we can take on it, how many times is this control being practiced, that leads to number of samples that we need to pick to get a comfort over this, whether all assertions in a FSA is covered by those controls. So, and what can be the error or impact of it if this control goes wrong or is not performing as required. So these are the tests that we do to get a comfort and if we conclude that we will be doing TOC for certain areas. In other substantive procedures, like we all know, proof in total, sampling test and other test of details, the traditional way and activities that we do. So for an like I mentioned, and whole area, or whether it is, even if it's a significant risk, can be addressed by other substantive procedures, is test of details, proof in total, and by doing sampling and all, sampling test and all. But yeah, same cannot be only with TOC, because TOC has to be topped up with some of these procedures. So this is how we plan the entire audit, and once we decide on how to respond to it, is where we take a cut-off or a temporary cut-off for your audit planning, where we are set with our plan of identifying the risk and how we are planning to address it. Now there is the next part of it, that is the third stage of obtaining evidence, which is more of executing the plan that you have decided. So that's the third part of it. But like I mentioned, planning is not a one-time exercise. It goes on throughout the audit. There can be different informations coming up. There can be different knowledge that you are obtaining. There can be different risks that you may not identify at the initial level, but during your execution it comes up. So these again add on to it, and your planning, you may have to revisit and revise it as and when you are privy to those information, or when it comes across your knowledge that these areas are also there. There can be some wrong accounting done, and say an expense or a ESOP was not accounted, which didn't come to your knowledge initially because it was nowhere to be found. But later, once you are informed about it, or it comes to your knowledge, you may have to revisit your planning, add procedures that you need to do for these, and update your planning. So planning is ongoing till the date of signing. Anything which comes up needs to be addressed and taken into consideration in our execution, which again keeps the audit on the desired path, right? So this is about audit planning. Importance of it is again known to every one of us. If we miss out on any single step in these, we may not be able to obtain the desired result. And one or two areas going wrong, we may end up issuing wrong opinion. So it's very important that we invest heavily in our audit planning to ensure the opinion that we issue is as per the requirement, and we have sufficient appropriate audit evidences to form that opinion. So that's all from my end. Happy to take any questions if there is, and thank you for your patient listening. I hope I was able to add some value to you. Thank you. Any questions, please feel free, or if anyone wants to share any of their experience, and if I missed out anything they want to add on to that, please, I'll be more than happy for that. Okay. Thank you. Thanks for your patient listening.
Welcome back, member. Now for the second half of the half-day seminar, we have with us CA Manish P. Bathija. I request CA Rajkumar sir to escort the speaker onto the dais. And welcome with the floral bouquet. Thank you, Rajkumar sir. Second half day topic is auditing technology tools and analysis its impact on the audit. I have a privilege in introducing CA Manish P. Bathija. CA Manish P. Bathija, he is a chartered accountant and comes with 24 years of experience that includes 8 years in video and 13 years with a large accounting firm. His client experience has largely centered around offshore centers. He has seen the transformation of back office function in India since 1999 and appreciated the opportunities as well as challenges faced by the client across the world. He handles audit of a multi-location manufacturing and service company listed on the Indian Stock Exchange, led audit of captive IT, ITES companies and startup in India. He worked on a large cross-border engagement including listed clients involving IFRS, US GAAP reporting, both as a group and component auditor. Managed several large engagement in India across diverse industry vertical like IT, manufacturing, business services, real estate and public sector. His key achievements are led the audit of one of the largest ITES companies in India with complex accounting, reporting processes. Excelled the concept of global subsidiaries audit from India, which has proved to be a significant value addition services offered by BDO India. Led the establishment of BDO RISE, BDO H, BDO UK operation, BDO Middle East. Led the India-US corridor for the firm for a period of 5 years. His expertise are statutory audit and inter-office reporting, US GAAPs, IFRS, control framework implementation, SOX, ICFR, listed entities including PCOAB, offshore center consulting. With this brief introduction, I present before you CA Manish P. Bathija. Now I request Baswaraj BK to hand over the memento to Hers Jain sir as a token of love and appreciation from the Bangalore branch for delivering wonderful section on the topic importance element of audit planning. Thank you sir, thank you for accepting our invitation and attending this conference. Thank you. Sir, over to you.
Good evening, everybody. Am I audible?
Yes, sir.
So, at least, thank you so much for taking out your time and coming to attend this session. I think my thought and my approach towards the entire session is to probably make it a little bit interactive. While there are some slides I could talk through that, but if the audience is okay, we can probably have it more in a discussion form, discuss a little bit more practical examples. That way, I think it would probably be that much more valuable for me to also learn from your experience and vice versa. If you're okay with that approach, we do it that way? Yeah. Okay, what was served for snacks just 10 minutes back?
One cent.
Sorry?
One cent.
Yes, one? That's all? It's specific. See, you need to be very specific. We are auditors, right? We need to be very, very specific on to what has been served. Chili bhaji, then?
Coffee.
Okay, then? Sorry? Little louder. Yeah, chutney, correct. Yes. Then? Okay, tea, coffee, fine. So now that way, what the spread of what is being served is very good. And I'm just picking up on the example that Harsh spoke. Now, I was talking to the gentleman who was organizing the food earlier in the day. And he was very passionate saying, what the snacks is provided by the institute. And he did not understand my question. I asked him who is making the food. And he said institute is providing for it. Now that's not the question. The question was who is making the food. Maybe the institute is paying for the food. But actually who is making the food? They're actually engaged in external outsourced consulting who is maybe all the machinery is provided by the institute. He is providing the labor and coming in. But again for him to come in and serve, he has to do a lot of planning. Right? And that's the topic that Harsh spoke about. Now just imagine for so many people, he's got the quantity also right. So he's had some experience around this, right? Yes, no? Yes. Thank you. So at least we remember what we did maybe about 10 minutes back. So I'm sure what we have studied and learned with our clients over the last so many years, we'll still remember it. Now, by the raise of hands, how many of you have clients that, I'm assuming most of us in this room would probably be practicing chartered accountants or will probably be working in an organization. How many times have you come across a client or a friend or a company maintaining books of accounts manually in today's world? Nobody?
No hands.
Yeah, one hand. So that's a very fair request, right? Because the Income Tax Act says you have to maintain books of accounts. It does not say you have to maintain books of accounts electronically or manually. Tomorrow when a notice comes to a company, now you have to go and produce the books of accounts. It could be manual or it could be what?
Electronic.
Electronic, right? So that's how the world has evolved over a period of time. Now I was just catching up with one of my colleagues over the snacks break, and then we are saying, okay, fine, how is Chat GPT and AI and machine learning going to disrupt all our jobs? How many of us sitting in this room are actually worried as to how will this disrupt our sector? 1, 2. I can just tell you only 2 of them are worried in the right direction. Other people who are not worried about it, please trust me, we all need to be genuinely worried. Because I think we are at a point in time in our profession. How many of you would be aware of the 99.com boom or the revolution around electronic software being creeping into our space, which I think happened sometime in the late 1990s, right? As a lot of our senior colleagues of here would have experienced it. Yes or no?
Yes.
What was your thought at that point in time, sir, when you had most of your books of accounts of clients maintained manually, and then you started seeing Tally was a brand new system that came into the market, right? Oh, one client is maintaining books of accounts in Tally, or let's say somebody maintaining SAP, you could count them on fingers. What was running through your mind at that point in time as far as technology is concerned? Anybody? Just please volunteer up. Yes, go ahead, sir.
So I switched to technology that way because in 1996 I was doing internal audit,
Yeah.
and the client clearly told we are on ERP, you can't do that audit. Accounting is different. So that time itself I decided let's switch to ERP.
So you embrace change, in short. Anybody else, sir?
Yeah, we were excited at that time. I was using Tally from Tally version 4.
Okay.
Maybe 4 and 95 I think it came. Tally 4, then 4.5, 5, 5.5 moved on, but we were able to adapt at that time. We were
Great.
not worried.
Excellent. Anybody else, sir? Okay, let's ask a question leading from what? Yes, sir, please go ahead.
I was very excited switching over from manual to Tally, but never felt a threat.
Great. So now I think a lot of us at that point in time we looked at technology with hope, with excitement. And two of our colleagues are here, again nothing right or wrong in what you think, right? We are sitting a little concerned and worried to say, okay fine, how will Chat GPT or AI come and impact our profession? If you ask me, I am also on that side in the minority. Because we are probably not spending enough time to think how will technology come back and impact us. Now, when was the first time that somebody used Amazon in this room? Maybe just by the show of hands, how many years back? 2 years back, 3 years back, 5 years back, 10 years back? Can somebody just take a wild guess? 10 years back. Okay, anybody else? When did you do your first online purchase? And we'll come to the subject. So let me remind you, I am not deviating from the subject, I am on the subject only. Right? I just thought bringing some little bit elements of importance relevance is important. When would anybody have done the first purchase online? 2000. So you're talking, my God, this is even well before we had the smart technology phones, right? And a lot of respect for you, sir.
You know, flight tickets way back in 2009 or something like that. Still via credit card online, right?
Correct. Credit card online. So all of us on that time we're using. Now can we just change our cap? I said today we are the auditors of Amazon. And we are sitting in 2000. Technology is still coming our way, but the client has already gone ahead and embraced technology. And they are saying, well, if you do not know technology, you cannot come and audit me. Exactly to your point. Now, how do you reinvent yourself? And is it relevant or is it important? Again, now I'm just trying to change the hat from, let's say, being a consumer or a user of technology, because that is what is actually driving business. It is never in the world that we have seen, see, accounting audit is what? With all due respect, and I think my colleague had a slide, right? In God we trust, rest all we audit. Right? Now the thing is, when you come down to assessing a dead body, effectively our auditing profession is nothing but analysis of a dead body. Because the year has already gone by. With all due respect, we are analyzing, doing a post-mortem of the prior year. Right? But if the dead body, type of the dead body is changed, you cannot do the same post-mortem what used to do maybe 10 years back. Nowadays, even on post-mortem also, they have brought in analytics. How many of you have undergone a surgery in the recent past, or some family member of yours have undergone surgery? It's okay, you don't need to name the member or the type of surgery. Anybody in this room, at least my dad has undergone a surgery. Now, have anyone of, I'm sure some of you would have heard of robotic surgery.
Yes.
Can somebody explain to me what is robotic surgery? It's okay, just in your own simple words. I recognize we are all accountants, we are all auditors in this room in some avatar or the other. We will get the definition wrong, but that's not the spirit.
Surgery done by technology or machine.
So you are using machine over there, right? Machine and technology. Yes sir, please.
Same. Instead of manual doctor doing it himself, he is just programmed, wherein the programs are operating as per the will and wish or the direction of the doctor.
Okay, great. So now let us flip this question to saying you are the auditor of that hospital. You have two doctors who you are doing a surgery for. One comes with his own hands and experience of 25, 30 years. And people, even till today, we said, right? How many years of experience does a doctor have? 30 years, 40 years, 50 years. And that's what gave us a lot of confidence that we should go to this doctor for our surgery, right? But today when you're talking to a machine doing a surgery, there's no question and relevance of how many years of experience does that machine have. But there is a cost implication difference. Now, as an auditor, let us just brainstorm and say, how many places will this have an impact to us as an auditor if you are auditing a hospital? And in which all angles? And then somebody just throw a wild guess on how technology and a doctor competing for the same heart surgery, how the cost elements could be different.
One-time investment.
One-time investment in the machinery, correct. So you are thinking from that side, great. Again, now depreciation will come now. Doctor cannot be depreciated. The machine will be depreciated. Great. Then?
Salaries to doctors.
Sorry?
Salary need not be given. Operating charges.
Correct. Operating cost is not there for him. Yes?
Lesser staffs will be required because doing a machine if they are doing. So,
Yes, you're right. We may require lesser staff. Then?
Accuracy will be there.
Greater. That is the biggest point in today's world. Greater level of accuracy, because today machine will say 99.99% accuracy. But human precision is there. There is also another concept of minimal invasive. Right? Now, let us come back and tell me, when you're auditing the hospital, is that system relevant for you for audit or no?
Yes.
So, how many of you think it's relevant? How many of you think it's not relevant? Okay, and how many of you think it's not relevant? From an accounting and reporting point of view. Now this comes to the point where Harsh briefly spoke of audit planning. What is our job as auditors? Are we the doctor or are we the accountant or the auditor? So, how the machine operates on the patient is a business tool and business technology.
Doctor will take care.
Doctor will take care of that. But what we need to take care of is what technology is being used for accounting and reporting. You see where the conversation is headed? So in any organization you go to, let's say Amazon, right? Amazon, they probably have a lot of softwares to do data analytics. How many of us have not got forced advertisements? Suddenly you say, I'm thinking of buying a washing machine, and suddenly pop, washing machine ads keep coming up. 35,000, 30,000, new discount here, there, right? Well, that's again a tool at the back end. Now, is that tool which is pushing up the advertisement, is it relevant for our audit? Yes or no? It's okay, we have had our snacks, one more round of snacks you can organize. The volume could be a little higher, it's fine.
No, it's not that.
It's not relevant, right? It's spot on. It's not relevant because that's an advertisement tool. Is it important for the business? Answer is yes. But now let us change this question a little bit. Now, if this tool will tell you, it's given you 1 million shots, and for each 1 million shots, the consumer means, let's say a Whirlpool or a Samsung or whoever it is, they have to pay $5. Now is that tool relevant?
Yes.
Why? Correct. We'll come in with some more practical example. How many of us have used the UPI payment on a day-to-day basis? Everybody? We using technology out there? What would happen if 1 zero goes off from your bank balance?
It happens. It doesn't come back.
Correct? It doesn't come back. Now, so technology and tool is something which is engulfed us in every aspect of our life that we come back and see. If somebody is maintaining books manually, sometimes I feel he is the most sensible person. He is not engulfed himself with all this confusion because even at that point in time, people wanted the balance sheet on the 7th day. Today's day also, you're getting it on the 7th day. Right? But then we cannot really avoid it because our entire society has really evolved in a fashion which is saying that it is moved on from time to time.
Volume also important.
Volume is also there. Now, if today we all want scale, scale will come only if we all embrace technology. If a doctor has to do that many more operations, he has to rely on robotics to do the basics of life. He cannot be sitting and spending 4 to 6 hours on a heart surgery, what used to happen in the early 2000s. I'm not going to disregard what the doctor used to do then. But just that technology has helped him evolve over a period of time. And today he can do maybe 5 open heart surgeries versus 1 at that point in time. There's also a benefit of technology. That means how many people who are suffering at that point in time, they're getting that much more faster medical treatment and attention when it really matters. Right? So we are all using technology in every form. And this is the same thing which is relevant for us from our accounting reporting point of view. How many of our clients, now one gentleman did speak of him using Tally from Windows 4.0 or 4.5. Which version of Tally is running today? Sorry? It's okay, I do not know. No, let me admit, I do not know. Right? But the point is, even Tally at the back end, when they started, they come up with 1, then 2, then 3, then 4, 5, they keep on evolving. Right? Now, how many of us will take a report from Tally and say, it has come from the computer system and I can rely on this? It's okay, the answer can be yes or no. But no answer cannot be the answer. Sorry, sir?
You have to verify it. What the input is correct or not.
Correct. So basically, Tally is nothing but, it's like a garbage box. What you put in is what it will come out.
Yes.
It is only a basic accounting repository software. Now, what if the owner is trying to work on a Tally and somebody can modify it in the back end? Can you place lights on the system? Sorry?
No.
But what if you do not know if somebody has modified the system or not? Sorry? Audit trail is only giving a trail of the transaction. And I'm sure if there are going to be 1 million transactions, I do not know how many of us will have the time to go and check the audit trail for each and every transaction. And what if somebody has the ability to go and delete the entire audit trail itself at the back end?
Parameter changes.
Sorry?
Identifying the parameter changes.
Exactly, spot on, sir. So now these are all the inherent risks which are there in our IT system. So each one of us will have to accept and recognize. So Tally is an accounting software which does a repository that has its own set of risks. Now, how many of us do payroll processing for a client? Payroll processing or GST processing or an income tax TDS computation for the client? How many of us are not using Excel sheets, are probably using some technology or some tool or some software which are available in the market? And we are all using, now we are all assuming that that software and the technology is working correct. All of us also do our income tax filings for ourselves or the client. How many times have we not identified, oh God, there's a bug in the system, type out a report and send it to some agency, right? The income tax department agency. Because there's an error in the system, there's a bug in the system, it has to be addressed. If it is not fixed, if it is not addressed, you cannot file a return. Right? So as an auditor, the way we look at it is, we need to probably always reflect back upon the IT system and say, is the IT system foolproof and secure? Because ultimately what data is coming out for you from the system, is that relevant and can you place reliance on it? Because if somebody has gone at the back end and modified any of that data of the system, what ultimate opinion will be signing is incorrect. And in today's world, I'm sure all of us are saying our peer reviews, the rigor of the review is increasing, which is a step in the right direction. NFRA has come, they have increased their rigor. We are now having chartered accountants who have to respond to answers from the IAS officer or the IRS officer or some IFS officer who would say, now this is written in your auditing book, now please prove it to me, what have you done over here. Right? Now there is an auditing standard also which is there, which talks of IT risk which needs to be understood and assessed. But let me ask you one fundamental question. In our CA curriculum, are we taught how to test this IT system? Whose job is it to test it?
Management response.
System auditor.
The management will do that job. I think that is correct from one side. But system auditor, but again, I'm talking about what qualification will the system auditor come with? CISA is 1 degree. Right? Now, because there are many systems, you've got SAP, you've got Oracle, you've got a payroll processing software, you've got income tax processing software, you've got multiple things. We are moving to the world where people with a dual degree, let's say somebody has got, let's say, a chartered accountancy degree with a CISA degree, or chartered accountant degree with an engineering degree on how to design software, on how to go and test software, they are becoming the winners in today's world. Why? Because they understand that the relevance of the IT system is there. They've got the auditing skill set over here. Now both these products have to get married for the authorized person to sign the accounts. But a lot of us, including me in this role, I do not know whether we really possess that dual degree. And if you do not have a dual degree, then you basically need two different bodies to come together. One will be the chartered accountant who has to come and do his work as a chartered accountant, and you also need one other engineer or a CISA person or whoever it is to come in and test the IT systems. Because if he is not going to be able to, if he doesn't understand audit and he doesn't test the system, he cannot give the output to the auditor. And if the auditor cannot understand the IT system, he cannot ask him what to go in, which system to go and test. Right? So now how do we come around dealing with this particular maze of how many systems and everything that is there is what is the objective of today's session. I just try to set the context of what we will be discussing over the next, I don't know how much time I have.
It's a huge risk. Actually, IT systems are not tested means it will pose sometimes very huge risk.
You are absolutely spot on,
One of
sir.
the live case, and just take 2 minutes.
Yes, sir. Please go ahead.
Stocks were coming very high.
Sir, is he audible to you at the back or do you want the mic? Great. Yes, sir.
Stocks were coming very high, and I asked them to check the physical stock. When they compared, it was like totally difference was 1.75 crores. What the management did is, this is nothing but mostly somebody has stolen. So they have given a notice to the storekeeper. Storekeeper left the job. Police case was asked to be filed by the top management from the Europe, Asia, who were handling the Asia Pacific. I was doubting, only thing is, this particular stock is not a gold. It's nothing but a carpet tiles, It cannot be sold easily in the market also, because all the IT companies are only buying. So they want matching and other thing, it gets sold through this thing. So I was telling them, repeatedly check your software once again. Then somehow we made some tests. In the test we came to know that there is returns were not accounted properly.
My God.
Yeah. The guy was already issued notice, he was left the job, he was in a fearful kind of thing. Lawyers have given already this thing. Case was supposed to be filed. Only thing is, mine was like, this is not a product which can be stolen easily. Then the Europe team visited and all, they checked the software. It's purely a software.
Now, then a big round of applause because what is very important for us in today's world is ISA 315 also says you need to understand the IT systems, right? And which is again, you go back to the point, as a chartered accountant, what can I do, right?
Many times common sense if you don't use it.
Exactly.
It becomes totally.
I was just trying to use our institute authorized word which says applied professional skepticism, right? Which is nothing but a glorified way of saying this common sense, right? So a lot of us, we actually go and relate back common sense to a lot of basics, which is fundamental understanding the business. We will be able to tell the engineer what he has to go and test and why he has to go and test it. Otherwise you will say engineer is an engineer, right? You give him 10 systems, what is his job is to test it, he tests it and give you the report. But what do you do with the finding? So in fact I'll give you another example, very, very spot on. So another live example, this is auditing an IT company. Suddenly you see means the value of inventory, I will make up a story for a number, has gone down by 100 crores. Quantity is matching, rate is matching, but INR value is not matching. And we spent 3 weeks, day and night, having lunch, dinner. That's our thing. Now we always get a joy. Sitting in the client place, okay, we'll have dinner also the night and day. And next morning breakfast also there. 3 weeks of sitting and thinking what happened. Then exactly like how sir mentioned, we realized that accounting for inventory, issue and purchase is happening in dollars. And that is the year in which dollar rate fluctuated significantly. So purchases were happening at 80 rupees, but when let's assume that the dollar rate went down, issuance happened at 78. Now inventory is inventory. Now I don't think our old legacy accounting standard 2 or in the current India standard, it says you can apply forex rate and apply because why? It's a non-monetary asset. It has to go to the historical price. Now if they are getting the inventory at 80 rupees and issuing it out at 78 rupees, there is a delta of 2 rupees. Quantity is matching, dollar rate is matching, but that INR conversion rate had an impact on the account, which is what led to a significant drop in the inventory value. So while now we are trying to understand a little bit more as to what are the risks that an IT system can actually pose to all of us, and ultimately when we put pen to paper and we sign off the accounts, why it could be potentially right or potentially wrong. And it's our duty back to the society that we have to preserve and protect the numbers that we are signing or filing on behalf of the client. So which is why I think IT systems becomes extremely critical for us to go and think. If anybody, and our clients will come up with this constant notion to say, it's a system generated report, take it, rely it. Why do you want to go and test it? How many more samples do you want to do? Gone are the days when we can pick up more and more samples and test it. Right? IT system plays a very, very important, relevant role as a part of our overall audit planning and testing.
It doesn't like this is the example. When it
Yes.
is transaction, they entered wrongly and ultimately they provide it.
Yeah, but after how many years? Now, if you ask me, what could, again I'm just debating, right? What could be the real problem? Because IT system would have been tested, everything would have been tested. There could be somebody who's designed the formula in which the automated accounting would take place, and somebody has probably made some assumption in that formula, or that formula is behaved in a funny manner in different situations, which is giving you the error. Now, as an auditor, you have to test the IT system whether it is protected or not. More importantly, that automated formula which is designed in the system also has to go and be tested. Now let us go back to our old CA final days. Study module 1, study module 2, study module 3. That's what I remember. I think in today's world maybe it's a different concept. Please tell me one subject where they have taught us how to test the IT systems. They have told us to assess the risk of IT systems, but they never taught us how to test the IT systems. And a lot of times this common sense logic will have to always prevail, and we will have to bring in a technically competent person for them to come back and test these things. And if you are thinking that this is going to be relevant only to a large organization or to a smaller organization, my humble request to you is it is applicable to each one of us irrespective of the size of the organization. Right? So now we're talking of, let's say, finance and accounting. Now we're trying to probably get to the point of saying how many such systems will really be there as to that a client may be using, right? So So tally is one from accounting point of view. Can all of you just reflect back and say, how many more accounting systems can a client be using in their day-to-day operations? Some of it could be business software, like how ma'am also mentioned, when you have a tool which is throwing up automated, populated advertisements to you, that could be a software. But then if that software can have a financial implication for you, it cannot have a financial implication for you. Robotics, if it is only performing a surgery, it's an important software, I'm not trying to undermine it. But it's of no financial relevance to me because I'm not getting a revenue number out of it. But if that software has a recorder and says how many patients has that software or that machine gone and operated upon, then that answer could also change. I think fundamentally going back and understanding and reflecting on the business becomes very, very important to say how are we supposed to do it. So if all of us could take a step back and maybe just debate and say how many software or tools in which area would a client be using it on a daily basis, and you could reflect upon your own client and your own experiences.
4 to 10. Minimum 4 is
Yeah, let's try to debate what type of tools or what type of software they must be using, or what type of mobile application they must be using.
Payroll processing.
Payroll processing, one good. So now does payroll processing, does it have financial implication? Yes or no?
Yes.
Yes. Next.
Stocks.
Stocks.
For generating invoices,
Generating invoices, correct.
CRM.
CRM, yes.
treasury operations,
Sorry?
treasury operations, separate software,
Yes.
Finacle for bank.
Correct. Can we discuss some tools which the client is using which has got no financial implication?
Operational tools.
Sorry?
Operational tools.
Yes, like there's some examples.
Help desk system.
Yes?
Like attendance keeping software and things like that will not affect us.
They could be right, because if somebody is doing attendance recording, but then your payroll processing is of no different logic, then attendance is only a administrative hygiene importance, but may not be of payroll importance on that count. Good, then?
AutoCAD, designing.
AutoCAD design, very good, because it's very important operational software for an architect, but for new financial reporting, not relevant. Then, okay, let me try to make some examples and to share it with you. Let's say quality check. You have a software doing the quality check. What about that? Yes, or the financial implications? No.
implications.
That's all we know as an auditor.
Every software has financial implication in terms of quantitative or
Rejections,
Yeah.
Only qualitative.
Not qualitative. Only quantitative is certain software.
This, in my example, I'm trying to put across, it's only qualitative.
Quality, because there is a rejection is there. You cannot recognize as a this one.
So again, it could be debatable, right? Which way it is. Now, if you want to go back and assess, again, imagination can be man's best friend, right? If you say the data point from the quality software is important for me to discuss how much would be the warranty provision I make on my inventory, it could become relevant. But if it is only for putting that ISI mark, it may or may not be relevant. Again, so every system and application will have to be studied in that respect. So very important starting point is first is to engage with the client and to agree with him. First is to give a list of all the software and the application that he is actually using. How many of our clients will actually not be receiving payment by the payment gateway or the UPI transaction? It goes into the bank, but some of them also have wallets, right? Is that an application relevant for you?
Yes.
Will you go and test it? If you're saying it is relevant, how can you not test it?
I didn't say it was relevant.
Okay, sorry. So she said not relevant. Sorry, I got it wrong. So who says a GPay, is that software relevant or not relevant? Okay, let's make a simpler example. All of us are aware that the bank is recording transactions using a software. We are using the banking application system to test it. Are we placing reliance on that? Yes or no?
Yes.
So are we testing it? Yes or no?
It's out of scope.
It is out of scope. Answer is correct directionally, but why?
External link.
Because you have an external agency But there are other alternative evidences through which you can corroborate that. How you can corroborate a bank statement? By tracing every transaction back to the bank statement, marrying it what is there in the books with the bank statement. Then all of us would have done the procedure of, let's say, bank confirmations. Yes or no? In the bank confirmation, again we'll corroborate what is there in the books, what is in the confirmation, and the bank statement. So we perform alternative procedures around it. Now let's say, for example, how many of our clients have payroll processing outsourced to an external third-party consultant? Sorry?
Normally every company will do that.
No, so most companies actually outsource their payroll processing. There are multiple agencies. It could be one of our colleagues within this room or another agent, another company outside. Now, in that company, are we saying payroll processing software, is it a relevant financial application? Yes or no?
Yes.
Anybody saying no? Sorry? Anybody saying no? It's okay, it's fine. Okay, I couldn't incentivize anybody towards no. I was hoping somebody will say no. So if everybody is saying yes, are we testing that software? It's okay, let's have a divided house.
If we are outsourcing the payroll process, then we as the auditor for our client, we will not be assessing that software. So we are taking a report from the third party.
Yeah, so now we'll go back to the first question that we discussed. Right, and it's perfectly fine to get the answers right or wrong, because I think even in my professional journey, I've got answers right and wrong. Right, I'm just only trying to share my experience. It may be just a few minutes back, we all concurred in this room that payroll processing is a financial relevant application for us. Now it doesn't matter to an organization whether I run that application or somebody outside runs that application, because application is an application. So to our mind, so long as that processing of data that happened on the system has a touch point to your financial statements, it does not matter whether that software is there in your company, outside your company, under your control, not in your control. Those are all administrative challenges. As an auditor, that financial reporting system is relevant to us before we put pen to paper. Now we come to the second point of the challenge to say, how do you go and test it? Because again there are two methods, again both are prescribed. What are the two methods? Can somebody tell me? Sorry? How do you test a payroll application if it is outsourced to an external third party?
The input to the system is correctly coming to you.
Yeah, so one is input output, that is correct what you mentioned. But how do you test that system?
So we will just work out randomly few salaries and test check whether the mechanism followed is right or wrong, and we will apply it throughout the period randomly to check if it was consistent throughout the year.
So what you're saying is,
Simulation.
what a system is doing, you will manually rework it and you'll do a test check.
Since we don't have access to the software, we might do it manually and cross check. That is one of the things. And if we have access to the software, we would further check in different ways.
So you're absolutely right in saying that reperforming the test of a calculation by the system is one of the acceptable methods of doing a test if you're not able to validate the system, because ultimately we don't have control over the system. We have to perform alternative procedures, and your point is spot on that. But I'm just coming before that, there are two methods. One point you rightly touched upon to say that we go to that particular person and test that system. The second method is, how many of you would have heard of a concept called type 1, type 2 report, or a SOC 1, SOC 2 report? So SOC 1, SOC 2 or a type 1, type 2 report is, if any agency is processing any data, financial data for your client, they are supposed to be having proper IT system and proper controls running in that organization. And that process has to be certified by a qualified accountant. And he has to issue a prescribed type 1, type 2 report. If you get that type 1, type 2 report, you confirm, is our application covered, is our client covered, is the period for which the report is being given under type 1, type 2, if all the three are covered, then you can take this report and place complete reliance on it as it is blindly. But if you do not have that report, then you have to do something more.
Can you further explain further these two reports? reports.
Okay, so now what type 1, type 2 report is, let's say today I am an organization called ADP. So ADP is a payroll processing software. Now how they process payroll is they have got their own proprietary payroll software. Now data comes from the client, it has to go into the system in a secure format. Once it goes in the secure format, the system has to perform automated calculations. Then it will come out, somebody will have to do their own sense checks and then send that data back to the client. This is as far as input-output is concerned. The second is, somebody has to go and test this IT system of the company and say, has anybody done any unauthorized use to the system? Has anybody tampered with the formula? If the formula that has been tampered with, has it been tested in a test environment? Has somebody gone through the entire checks and checked if the output is coming out correct or not? So somebody is actually going in at the back end. I like to call this like the black box. Somebody has gone inside the black box, trying to understand how all the programming and system is used. Now today, for example, take the system and computer. How many of us say, okay, 1 plus 1 is equal to 2 is there in the system? Right? We all do it, right? So this is our black box. But how is the formula inside designed is what the person has to test. Now, we have two choices. Either we engage a particular system auditor to come and test that system for us, one option. Other option is ADP will have many clients. Let's say to make up a story, they've got 1,000 clients. Imagine ADP's administrative difficulty, 1,000 people have to come into his office and start testing the same system time after time. Right? He's never going to be able to do it. So in every country there's a regulation to say that any agency that is processing data like this, you can get a type 1, type 2 report. It means an external auditor will again come into the company, will test the process whether it's working properly or not, will test the IT system whether it's working properly or not. If it is working, they give them a clean chip. If it is not working, then they will issue a qualified report saying that controls are working but maybe automated calculation is not working properly, or somebody is tampered with the system, we do not know what is the risk that has happened in the system. So that is the output we have to look out for. And a lot of our fellow colleagues, chartered accountants, also do issue this type 1, type 2 report if they have a system auditor with them in their own organization. And this becomes very relevant for all of us. How many of us think that Tally is a very good software? Or let me rephrase the question now. I'm seeing hands go up. How many of us believe that Tally is a very secure and a foolproof software? Now we come to the next question. So I think I'm very impressed that everybody got this answer right. But Tally is a very operationally efficient software.
Easy.
Very easy. But it is also very easy to go and modify any of the data.
Only you can put on admin tool. But again, admin tool, if you remove it, you can.
So there is a certain inherent risks which is there in the system. Now does that inherent risk allow us to place reliance on the system or not? Now if you go and tell most of our clients, you say IT, your own Tally is not reliable, I'm sure you will fire us and throw us out of the door.
Tally is the better.
So for example, also so many years I'm using Tally, what is your problem? If I am using, you also use it, right? But default answer, that's what is going to happen. But fact of the matter is, Tally is not the most secure IT system, unfortunately, to what standards have been prescribed for us. So it means that we need to engage an auditor either to come and test the IT system, rest assured don't waste your time and money on that because it's always going to fail. So what is important is we need to do two parts. Understand the IT environment, we say it's Tally. We understand the IT risk, we say it is prone to these type of edits, we may not be able to place reliance on the data. So it means that we place reliance on Tally for the output that comes out, but I have to perform alternative tests so that the number that comes out on any of the report, I can place reliance on it. Now Tally also does a lot of automated calculations for depreciation. You cannot place reliance on the calculated depreciation as it is. Even though it is system process generated, you cannot place reliance on it. You will have to do a recomputation and reconfirm that the calculation is correct or not. Why? Because we have not tested that system. If you test that system and we come to what aspects we can test, then you can place full reliance on the system, no problem at all. Whether it is one transaction or 10 million transactions, no problem to place full reliance blindly. But for that you have to do two things. We have to test the system, we have to test the controls around that system. Are you with me so far? Now, once we identify the IT risks, IT risk is a lot of the points we went and discussed about. Like any company, they need to design controls around that IT risk. Now the IT risk that somebody can do an unauthorized modification of the software, that's a risk. Now to prevent the risk, they say, there is an audit log, nobody can modify this log. Any changes to the system, it has to be recorded how it is done, automated recording, who made the change, who approved the change, and they need to maintain a log of what is the change that has been done and who authorized and approved it. Right? I'll just give you one simple example. Now let's say tomorrow, our income tax department says depreciation on computers. I'm assuming today the depreciation on computers is 40%. Let's say no, tomorrow it will become 60%. Now somebody in the software has to go and modify that rate, no? From 40 to 60, so that we can close our eyes and say, yes, it is correct.
Rate of interest.
Rate of interest, anything, right? It could be anything over there. So it means that somebody has to go at the back end in the system to modify that. Till such time that modification is not done, it is not tested, it is not approved. As an auditor, I cannot place reliance on it. So that is the safeguards that we have to incorporate for our own selves over here. Now only if you are able to do all of this, you then identify the IT systems that are there, IT application and the controls, and then you have to go back and test it. Only after it passes stage 1, stage 2, stage 3, only then you can place reliance on the system. To say what report is coming out of the data, be it inventory, so like how we mentioned that the incorrect value over there. Now only after we test it, we recognize that all the logics that have been defined in the system are okay. Only then when the output comes out from the report can I say, okay, it is fine.
Similarly, one real case of the payroll. Payroll processing was done by the HR department. Softwares are separate. They are using. They give the full value of the amount to the passing the entry in the accounts. Salary value, total. What the payroll guy, one of the guy, was looking very affluent with the car and his salary is 40,000. But we had some doubt. So we checked in depth. When we compare the appointment letter, resignation letter plus total for 1 month, it's coming more. Then we saw that it's nothing but ghost salary. He had opened 7-8 places accounts in his same name, and what he was doing is till the last minute process, he will take the signature of AGM, MD, Vice President and everybody with perfect data first level. Data is perfect, fully matched and other thing, and one of the AGM was supposed to be this thing. He was busy in playing always stocks in the office hours. We can make sure. That is one of the biggest error also. Means 2-level checks. HR guy used to give, this guy used to sign.
But I will have to be very careful when if I appoint you as an auditor. Because all you should be very happy because all the employees will get a full check over there.
No, you can check my credentials, especially with Manipal.
No, I'm sure everybody is there.
Manipal group you can check. Yeah? They say if I sign, they'll invest. What I did is, when we cross-checked this with this thing, all the ways, like resignation letter, this plus appointment letter plus this thing, mismatch was coming. So then mismatch I tried to ask with that HR guy, how you are able to come with what he says, he had a Mahindra, this one, Velour and salary, means he was telling, no, we had Devanadi land and all that we sold. He gave an answer. So I was also thinking that is quite possible. But ultimately we could find that there was around more than 60 lakhs ghost salary was taken by him. He was getting married also. He got married also. I attended also. He didn't get any after the marriage, case was booked and he was taken inside, and then payment was settled and other things. It has come in the newspaper.
A big round of applause for sir for what he has. And let's pick up sir's example and say, how could the IT system have prevented this error?
No, outputs. We have to take the outputs from.
No, the output is the outcome.
Yeah.
I'm trying to take it one step further to say, as an auditor, if you have to give a recommendation to the client, a client always looks up to us, how do I improve myself more? What could we tell the client to change to avoid this error? One simple example could be, whatever output file that comes out should be non-editable format. Number one. Number two, whenever a payment has to go out from company A to the employee, there will have to be a bank account number. The bank account number should always be a unique account number. Because if the payment is gone into one account or the multiple accounts within the same name, there will be a KYC check being done. And nowadays there are tools in which you can spool and say, if you've got this particular account number, who's the account, if it's authorized by the OTP and everything, the company will get the data, there can be a three-way match being
One
done.
more thing also possible. PF is there. PF is there. When it's a PF, Aadhaar number is compulsory. When Aadhaar number is there, he cannot have so many accounts. There it will show 8 client diagram.
Accounts you can have.
No, accounts he can have. But here, when depositing, that's 8 to 9 accounts will come.
He changes only in the bank payment last.
So he's saying that the bank file is editable.
Yeah, no, bank letter.
My letter is editable.
Yes, yes.
I'm saying it now because today when we go back to the board and we sit down and talk to, let's say, the senior management, most of them they say they know their own business. So we cannot go and teach the client how to do business.
That is what the problem.
But we cannot tell the client, well, this is your business, change this and change that.
No, he will
But we can tell him how to strengthen his control. And if you mark my words,
Yes.
if you go to a client and give him 5 recommendations around technology and how he could do it to either improve his controls or to improve his business or to bring in better checks and balances, you will spend more time talking to him about those 5 recommendations of yours than actually the content of your audit report. I'm not trying to undermine the value of our audit report, because that's now, unfortunately in today's world, it is a given. Auditor has to give an auditor's report, there's a value, there's a compliance check on that. But now the client wants something more. And if you tell a client that these are the IT systems available in the market, which can help you improve your business or help you improve your savings, or let's say somebody spoke about treasury software, how to improve your cash management cycle, there are so many tools available in the market. And you can minimize your risk, and you tell them, okay, these are the errors that you found out. If you make these changes to your IT system, your controls will become better. You will be sitting with the client in every technology discussion of his.
He'll call you Not you.
So I think that's why it becomes very important to really go back and understand the IT environment, which is what, again, for all of us who do have our files subjected to peer review or files being subjected to NFRA review, ISA 315 mandates that we need to understand what the IT systems are there within a company. This is fundamental. Second step comes into scoping the application, whether they pass or fail, that is all secondary. ISA 315 says, please understand how many IT systems are there in a company, and you need to make a segregation of here, which are financially relevant for you or not relevant to your financial statements or not. So this is also now being modified in the particular standard, and then you can, all of us, there are standard templates now available. All of us use ChatGPT, I'm sure, for our children's school homework. I'm sure all of us do use ChatGPT, or you're over there to write some storyline or something, use ChatGPT, get the answer out. ChatGPT, again, because it's open source, that is not reliable. So nobody got and tested their IT system, which is why companies don't really use it. But companies have now started developing their own ChatGPT system, based on their own proprietary data and control that they can manage it. So which is why I'm saying, again, coming back to the point is, understand the IT risk, you need to document that these are all these applications that are scoped in, and then we start taking it out to the next level, right? Some of the key things, and I think a lot of it is what you have touched upon, and I'm not going to dwell upon the technicality of the subject, but I think in terms of practicality as to where it is, unauthorized use of the IT software, unauthorized modifications to it. So let's say somebody has to say a transaction is approved. Nowadays, with the click of a button, we also go on the online website, Amazon, order purchase, OTP comes approved, right? No matter what, if the system is recording, and nowadays, have any of you received an unplaced order in your house and say you have placed an order, please accept it? How many of us have faced it? A lot of us who do deal with online transactions, at least I also faced it. Suddenly somebody show up at the door, sir, you have placed an order, please make the payment, cash online payment, and give you the money. And he'll have your name, he'll have your address. What has happened over there is, your database has got compromised somewhere. And he's misused the data, he's placed an order on your name and he's come to your house to go and Say, but then over there, because we are controlling it, we know how much we have bought and how much we have not bought. We tell him, oh, I have not bought this item, please take it and go. Or we get into an argument with them or whatever it is. But just imagine as an auditor, if a client is doing this, how much of their revenue is legitimate, not legitimate, and we have to sign off the financial statements. There is an implication for us on that also. How many of you have heard of the concept of cybercrime or ransomware? Ransomware is where somebody takes your data. And earlier in olden times, they used to kidnap a person and say, I want ransom. Nowadays, new technologies, even they also reinvented. They take your data and say, I've kidnapped your data and I want ransom. And we are giving a new term to that, it's called ransomware. Right? So that is a legitimate term that the children are taught in today's world. Right? If I take your IT data system and I ask you a ransom, it's called ransomware. Our SEBI and all the matured stock exchanges in the world require management to report cyber crimes within a stipulated time to the exchange, and that becomes public information. And the ransom can range anywhere between $1 million to $700 million or even billions of dollars, depending on which person has been able to hijack your data. Now, is that relevant to us as an auditor or not? That comes up to the point that as an auditor, I can only test their financial systems and financial application systems around it, and I can do a basic check around their overall IT environment. But IT environment is again somewhere it becomes our responsibility that we go back and tell our client if their IT environment is fungible or not. Because our client, today why all the startup companies are getting sold at such a high valuation? They have created a big database of customers. They have understood the purchasing pattern, consumption pattern. They know which person through which pin code, what type of product they want to order, who orders, who wants a milk basket delivery in the morning, who wants a doodh wala to come outside the house, who wants vegetables and the vegetable cart to come. There is so much of data analytics that has happened. How has data analytics happened? Because over the years they have collected so much data and it come. Nowadays, database, while it may not have a tangible value to it, but it can also cause a lot of tangible negative impact to you if it goes into unauthorized hands. And that is why as an auditor, you should always go back and ask the client, have they done a cyber risk assessment? Have they protected their IT environment? And you as an auditor should also engage with the system auditor and come and test that IT environment whether it is adequately secured or not. So our responsibilities is nowadays growing well beyond the basic financial systems, financial statements or the tax returns or any other returns we're doing into a lot more other variety of things that we need to do to still issue the same value of opinion that we've been giving over the years. Any questions so far? So there's some examples of if somebody could give it a shot and say, for question one, what's the type of risk that you see it? Or maybe I can read it out. When there are improperly secured interfaces to and from third-party systems, what type of risk it is?
Unauthorized changes.
Give it a try. Anybody else?
B.
Right, it's B. And because again you are talking of interface of data between the two. If the network exchange between the two systems is not accurate, imagine you tell somebody I have to pay him 100 rupees, but in the network it becomes 1000 rupees. Right? Basic input output control checks, that means the security is the risk. Now second one. C. Exactly. Now again just imagine you put a depreciation on the machine, incorrect depreciation, straight impact on your financial statement because the data is coming out from there. So what goes on the financial statements? I will not ask the third question because the answer is yes. Right? But I just think the essence that I wanted to get across to everybody is testing of IT systems becomes very, very relevant irrespective of the size of the company, irrespective of the type of the company, because there is an implication for us on all counts on this piece. In fact, a lot of people, maybe some of you must be auditing the company where bulk of the sales goes through Amazon or through, let's say, a Zomato or through a Flipkart or through one of these online big boys, right? Let me use the term. In that, if you all have seen the statement, they say revenue 100 rupees, commission 5 rupees, advertisement 20 rupees, delivery 5 rupees. But how many of you have actually gone and checked what is the breakup of that? Because if you ask a company to go do a reconciliation of it, and there are chartered accountant agencies who have used this as a profession now, where they focus on vendor reconciliations. So what data are recorded in the vendor system, they go and compare it with the Amazon system. They have understood how to fight with the system and get the answers out, and they have found reconciliation errors between the two. So if somebody is telling you that, okay, fine, this statement is coming from Amazon and I'm very happy with it, I made my money, it's okay, how much it wants to take, you know, then you're only happy with the residual value. But imagine if you tell the client that there's an error in the system, you should have got 100 rupees, but you've actually got 80 rupees. On the contrary, it already become free of cost for him. And so, because you have understood technology, you have understood system, that means that much more value for yours also improved in the eyes of the client. So which is why it becomes very important to understand IT systems from anywhere and everywhere. You have to, again to your point, use alternative methods, apply the common sense logic, go back and test it, corroborate it, and then assess the implications. I think I'm running a little tight on time, right? What's the time? Sorry? Oh, so we still have another half an hour more. Half an hour more or how much time? What time does the issue sorry? 7:15.
So we have 45.
Oh, 45. No, I was wondering when does the register come out for us to sign for this CPR? It's okay, all of us have been there, right? So, I think some of this is a slide of a bit of a repeater here, determining the IT applications that are relevant for the audit on this particular piece. Understanding the IT risk, I think that's again very, very fundamental for all of us what we need to do. Now, a lot of us do maintain audit files, and especially for files are, if you are a peer review firm or an NFR review firm, I think the importance and the value for documentation is only increasing year after year. I'm sure the type of questions our senior will have seen, let's say a peer review auditor asking us maybe 15 years back to what is coming and asking us today has drastically undergone a change. Right? Now, it is also important that while we understand all of this, it's a different challenge for us to put down all these thoughts on paper, to communicate back to the regulators that we have actually done our job. And now the biggest challenge for us is, as an auditor also, there are now tools available in the market on how we could probably go back and make a repository save to the data over there. So what IT is we're using on our clients, for the regulators, we have their clients. So it's also important, like how you mentioned, sir, we need to have management control. We need to demonstrate that we have adequate control on our own files. If you are maintaining it on an electronic basis, because gone are the days, especially with Bangalore, with the rentals going so much through the roof, right? All of us are really wondering to say, what's going to be the rental for the next year? What if my landlord removes me out? I've built so much of goodwill value. Now imagine if you're going to be carving out all your space to store manual files. Or will you be moving to a concept of creating electronic files and saving it in a repository at the back end? Now the question flips. You are the auditor, understanding IT risk. But when you've got your own system, now you are the client. Right? And then whatever you are questioning or asking your clients, that is now coming back onto you. For you to go back and test it, assess and prove. How many of you, let's give another question. How many of you would be aware of how many days time are we given to assemble our audit files after the report signing date?
Before signing, we are
Sorry?
before signing, we should make the files ready.
No, that is, what you're saying is absolutely right. I believe on or before the sign-off date, you should have all your evidences in place. There's no doubt in that. My question is, there are some topics called housekeeping activities. So now let's say if you have to do a housekeeping activity, you've got bank confirmation. But now you have to arrange a bank confirmation, put it in a paper file, number the paper file, Sometimes all of us are there working under pressure of the client. No, please issue the opinion tomorrow morning, tonight. I have to get my bank loan processed, I have to file with SEBI, I have to do this, that, whatever it is, right? Now, as an auditor, I think the institute also and the regulators accept that I need some more time to put my house in order and keep the files ready. My question is, how much of a lead time do we have on that?
60 days.
Correct, it's 60 days. Now, 60 days is not only for the manual paper file. The 60 days is also equally applicable for the electronic file. Now, in the electronic file, let's try to extend this logic a little bit more. Ultimately, it's all linked back to this in one way or the other, right? So let's say now on this electronic file, you've got an email confirmation after you signed off the report. Do you admit that as an evidence or not on your file? You have signed your audit report on, let's say, 31st of May, last day for SEBI filing. But on 1st of June morning, the banker has sent you a confirmation letter. Do you admit it as evidence? Yes or no? It's come to you in electronic file. There is no difference between anything.
Yes.
You admit it as evidence.
Yes.
After the report signing date.
Yes.
The answer could be yes, because we may have performed some procedures before the sign off to confirm the
Prior
balance.
to that,
Yeah.
we acted prior to that because results have come later.
Online banking you will see it.
So we have done our alternative procedures, we have got comfortable, but yes, the additional paperwork, I have spoken to the banker, he's confirmed the balances, hard copies come in later. But as an auditor, before you take that email on record, you have to write the story. I did all these procedures, and this bank confirmation came on 1st of June. This is after the reports I did. Just imagine, like an auditor or like a client, you have got an evidence on 1st of June, but the regulator says you sign off on 31st of May. You don't write the story. What happens to you? What happens on that count? You just say on the day you issue the opinion, your evidences are inadequate. As simple as that. So how do you justify yourself? You need to write your story. Same thing is nothing but you've got certain mechanisms on how your IT system work. What changes you are doing, what evidences you are admitting. You need to write the story.
Again, they will say, you don't want to listen to your stories.
Sorry?
Again, the NEFRA or the authorities may say that we don't want to listen to your stories.
You don't want to.
Evidence shows that.
That's it.
Simple. They will go by the evidence.
I think the way I like to put it across is in terms of whatever IT system we are testing and everything, ultimately the audit file has to talk for itself. The way I like to put it across to the team is, in this room, if a dead person reads our file, will he understand? If he needs explanation, that means our file is not good enough. A dead person should also read and understand. If he cannot, we do not stand the test of what is the regulators and the customer expectation of us. Because that is the responsibility that is increasing on our shoulders day after day, day after day. Anything happens in the world. I think if somebody even robs one chappal out of a temple, they say, "Guys, the auditor first." He is not done his job properly this time. Something has gone wrong. Yeah. Then the media wants to say, first you have to go crucify someone. Now all data is available online. Who's done the audit of Windows Bank? Who's done the audit of Yes Bank? Who's done the audit of X, Y, any bank? Do a Google search within 2 minutes. Ask through Chat GPT or any other form. It just comes out in front of you. So, the point I'm trying to put across is, what we do, can we run away? No, we are not going to run away. It means that we have to further empower ourselves. We need to become 2 steps ahead of the regulators and start thinking. How many of you would have seen any of your nationalistic videos, right? Where you're talking of India, the India story, and then all nationalism, and then fighting, the police fighting the terrorists, or the NIA fighting the terrorists. How many of you would have watched that movie? Practically everybody. Nobody's raising their hand. I think everybody got tired now. Right? Everybody would have watched. Now, what is the essence of that? And we are no different to the story. A terrorist needs to succeed 1 time out of 1,000,000 times. But your agencies have to succeed every 1,000,000th time. So the pressure and the expectation on the NIA or the police or whoever it is that much more higher. And the same logic is applicable to us today. Because I cannot go back and tell any of the regulators, I did 9,99,999 audits perfect, but this one slipped through the cracks. I tried my best. It is not a good enough answer. When you pick up any of your IT system, and IT system, if you pick up any of your things that have happened in any of the recent past, all your cyber crimes, all your audit errors, restatement errors, bulk of it is down to somebody not having done a good job around the IT systems. And we are not, I think with India, we're all talking now, I think we said we are now 5th largest economy, we'll become 4th, we'll become 3rd in no time, and then I do not know what number, I also lost track of it now. Now if we have to go to those kind of large style economies, the IT system is the way. Our government is going the IT way. Everybody is going the IT way. So it also means that as a profession, we also need to go the IT way. In fact, there's a very good business opportunity that I really see, right, for our entire profession. Let's say if somebody wants to focus, and there are people already doing this, focus only on doing system audits. They come in and do only system audits, right? And that's a team who will be having a team of chartered accountants, team of engineers who are sitting and doing this entire piece for you. How many of us audit some of the startup companies? Let's say on the online education or transaction, all of us will have some touch point with any of the startup companies, yes or no? Yes. Everybody is heavily relying on technology, but because they are so focused on their pace of growth, they do not have robust controls. So as an auditor, I think if anyone will be doing a startup company audit, you will probably have a system auditor, and at least in my experience, 9.5 or 10 times, you will come up with so many multiple recommendation letters back to the client, where you can go back and tell them that these are the errors in your system, at least from an accounting auditing point of view, these are the risks to your organization, this is what you need to go back and address. How many of you would be aware of this application called Zerodha? A lot of us do use it on a day-to-day basis. You know how many, now Zerodha has got to do with stock broking, right? But who is the backbone of the Zerodha team? How many people in that team? Let's take a wild guess.
50.
Yes, only about between 35 to 50 people. It's just those 35 to 50 people are running the entire organization, managing. I think they are probably the largest stockbroker today in India. Sorry? Growth is the largest, or is it Zerodha? Okay, then they may be among the top two then. Fine. Now imagine for them, you have to go and account your brokerage from there. We cannot go through the traditional mechanism or system of going back and doing the Zerodha audit. Because they're dealing with so much of funds, and even all the regulators are also asking them to give a certification that somebody tested the IT systems. Right? Identifying the relevant ITGCs. Now I think somebody earlier mentioned the point that maintaining the overall environment is whose responsibility, auditor or the client? Client. So a lot of our clients, some of them could be matured through the system, some of them could not be matured, may not be matured through the system. But like how all of us would have heard of the concept called RCMs, Risk and Control Matrix. A lot of us do help our clients prepare it. We will have to ask them to also go and prepare it, even for their IT systems also. And that is where the concept comes in, to go back and identify the relevant ITGC, which is nothing but Information Technology General Controls. And that's become very, very fundamental and important for us in every piece. And then comes the mother of all the points, who's going to test it? Do we have the skill to test it, or we don't have the skill to test it? Out of scope. No, it's a scope question. Maybe out of scope for examination, but not for life. So some of us, I think our institute also does have a course. I think they have a course on ESA, right? If I'm not mistaken. For visa, yes. So even visa certified individuals are also recognized as individuals who could be a system auditor. There are also software engineers who have now doubled up to become a system auditor. It's all about understanding technology. How do the technology systems work? What are the gaps you need to identify? Just imagine going to the black box in a dark room and saying, find out how many holes are there in the black box. First of all, it's a black room, then it's a black box, and then it's a small needle hole inside that. Right? That is how our profession has had to go back and reinvent ourselves, and looking at somebody who's now going to be a system auditor or who's relevant is the person at the time of planning. This has to be decided. This cannot be decided at the time of I've got 1 week, 10 days to go for my sign off. Oh no, I've got this system ready to go. I then spoken an application. No. All of this activity should be done. Audit report signing date minus 4 months, minus 6 months. That's the level of planning that will have to go into this to get the answer right. Now, the other thing is understanding what is the automated control or the IT dependent controls, right? Can somebody give me an example of an automated control? Just any one simple example what you may use in your day-to-day life.
Reserve stock.
Sorry?
Reserve stock. Particularly this material has to go in SAP. We have a reserve stock.
Yeah.
So this material has to use for this purpose. Like this, we have this one.
So the logic is defined as a system, and the moment it comes below a particular level, you then go and start feeding into your reserve stock so that supply chain can come and start telling you, okay fine, you have not touched a reserve stock, please go and do incremental supply. So what you're saying is absolutely spot on, so that's an automated control. So the moment your stock levels goes into your reserves, automatically the purchase order should go out to an external third party for it to resupply the nuts or the bolts or whatever machine that is there. So that's a very good example for automated control. Can somebody else give me an example from somebody from the back on an automated control?
Sending data intimation.
Sorry?
Sending data intimation. Because it is a 60 days credit period. If 55 days, after 55 days, it will come as a, these are the data are outstanding. You have to send the intimation, you have to collect it.
Correct, could be. You're right. Then anybody else? Yes.
So import the data from billing software to accounting software.
That could be an automated. That could be an automated interface. That's not a control. Importing data is moving data from point 1 to point 2. That is a process. How will you make this a control? You could make this a control by adding one more check, or making somebody sit above, or implementing a logic whereby both the reports get compared and then it throws up an error report if there is a mismatch in the two reports. Importing data is a process. You are walking from one room to the other. That's a process. But have you worn the same dress when you are walking, when standing in room 1, and have you come out of room 2 wearing the same dress or not? And if somebody is checking it and confirming yes or no, that is a control.
Can
Yes.
you explain one issue?
Please go ahead.
See, in a healthcare sector, they had a separate billing software. So where they had daily at least minimum 100 bills. So from accounting, they were using Tally. So on every morning they used to import the data. In billing software, they didn't have audit trail also. So what has happened is once there, as per RBI regulations also, more than 2 lakhs you cannot accept the cash from inpatients. Okay. So above 2 lakhs, what they used to show as amount received from card, like that. So from between the billing and finance, they had a team. What they have done, once the patient has left the hospital, if the amount they have received from cash, they used to convert as card. But in Tally, they used to have carry forward of differences that are maintained in control account. But as per the knowledge, day end, it should be nullified, whatever the control. But this was not happening. Once when we started to check, even the hard copies also, the totals were not matching. Whatever the sales bill and the receipts they have collected. Say example, the receipt is of 2 lakhs, sorry, bill is of 2 lakhs, the collection is only of 1,80,000 and 20,000 is invisible. And another is the bank's receipts you told, the swiping, employees were swiping their own credit cards. So like this, they have embezzled approx 80 lakhs. Just a billing team and one finance person. And the finance manager didn't know about this. It was in the receivables, where there is no control. They have told everything is correct. So when we start reviewing the billing software and the accounts, there were mismatch and there were differences.
No, amazing. I think there's a round of applause for what has been identified. No, again, it's very important, right? Again, understanding the two systems. Are there actually two billing mechanisms, two systems? How is the actual bill being? Because no customer is going to go get to the hospital and not accept a bill for what he's paid for. So one side you're giving the bill and then you're corroborating that back to the accounting thing. So which is what has helped you, right? In terms of going back and identifying the mismatch.
And the drawback was in Tally, they were not maintaining in patient wise. Patient A amount
Drawback is in Tally or drawback is in the user of the Tally?
Both. User, they
No,
don't have
Tally is
any-
only a, see again, a tool is a tool. The tool will be used only as a tool.
Yes. Now, the way we made the ledgers also, see the what system they are practicing control accounts. But if I have matched to patient wise receipts means I would have the balance, whatever the receivables. But I was not having the receivables even patient wise also. Outstanding is outstanding. So there I felt there should be a control.
Yeah, absolutely, you're right. So again, that could be, now somebody could identify and bring it up as an automated control. Like, you know what, if somebody can define the logic, and again, who can define the logic? Any engineer who knows how to define a system, who can write the scripts, they can define a control. All they should have done is, I want the data to come out from X at the end of the billing register, and the next year what is got accounted from Tally, I just want the data to come from there. Automatically, if there's a mismatch, I just need to get an error report.
Night
I
audit.
got that on a regular basis to identify this. Sorry?
Night audit.
Yes.
Night audit job is that one.
Absolutely. It's again very much possible. Again, it's very important that as auditors, we are probably seeing certain lifelike situations where this has an impact onto our business. It has an impact onto how the numbers are getting impacted and reported. It's having an impact on the culture of the organization. And for us, all of this becomes very, very important as we go back and do our audit planning. Okay? Now, one of the things that what we mentioned is automatic controls on how we should probably do a reorder level. Now, you could also have IT-dependent controls. Right? Can somebody give an example of an IT-dependent control?
NPA.
Okay, if you could elaborate that a little bit.
So NPA terms are being defined. Based upon the terms, he has to fix up. Automatically, that account getting NPA, if he has one account is default. Manually, it is impossible to check.
So would that be an automatic control or IT dependent control?
It is IT dependent control, and that's automatically also.
Okay, maybe in the way you're trying to envisage your situation, you're classified as IT dependent control. So any data which is probably coming out of a system through an automated fashion, it is requires a manual review.
Yes.
Before it gets approved is called an IT dependent control. Now controls are broadly segregated into three aspects. One is you have the IT controls, which is automated. Then you have IT dependent manual controls, wherein the system has to throw out an error report, but you require a manual interface to review that particular exception before a person can take a decision. Or the third control is the manual control. If you have a manual control, most likely it will not be happening through an IT system.
So number of record, that is what we say first level.
Yes.
Second level is we can say that one person's salary should not exceed for a fixed amount. If it is exceeding some controls, automatically it throws error.
And then if it requires a manual intervention to review that exception report and take a decision, that's what we would normally classify as an IT dependent manual control.
Manual.
Okay. So I think these are all the other basic steps as to what goes into what needs to be done. Now generally, most of the multinational companies are very, very good in the way they've gone back and defined the ITGC, which is the IT information technology general controls that are there. But if you come down to, let's say, our organization, which are scaling up, especially the startup industry, they don't really pay too much of heed and attention to control at the initial stage. Once they come to a particular size, then they start focusing a little bit more. I think our job as auditors is to keep reminding the clients to say, come back to the basics, irrespective of your size. It's important you focus on getting your IT controls right, especially Bangalore being the hub of all the startup companies in the world. I think the second largest or third largest number of startup companies that are actually emitting from here. So it's become very important for us to also have that focus and have that same attitude and approach towards the testing that we perform at our end. Now, one other thing is, if there's a system, now if the IT system fails, you can go back and test it substantively by performing an alternative procedure. But if your IT system is expected to pass, then it may be a slightly laborious process, maybe a slightly different process, but we need to go through the process of testing the IT system, testing the IT controls, testing the output that comes from the IT system, and then assessing the findings from there onto our audit. Right? Now coming down to what we do with the IT incidents. So let's say somebody comes back and says, you know what, let's take the example of, let's say, NPA. Identification of NPA is correct, but the formula that is being applied onto the non-performing assets, RBI has come out with a notification that you should have made a provision at 25%, but company made it only 20%. What do you do with this finding? Who will identify this error? So auditor is the big umbrella. Right? So now you have two heads in the umbrella. One is an auditor who does the CA exam and pass. Other auditor done DISA or with an engineer who passed it. How are you going to identify this?
In the settings, you have to go and see.
Exactly, you are spot on. So you and the engineer, ultimately the auditor has to sign this off. You know what the regulations are there, you know what the formula is there, you know what it said. You need to give this to the engineer and say, for the NPA, this should be the formula and put into the system. He will take that and compare it with what is the formula logic defined in the system. If it's an error, he is supposed to give that back to you in an IT incidents report. So IT incidents report is nothing but all the negative findings out of his testings, he has to consolidate and give it to you in one particular place. Now let's say depreciation, all the rates are correct. But let's say somebody is completing depreciation by number of completed weeks, somebody is doing by months, somebody is doing by days, somebody is doing by hours. The logic is different everywhere. Right? Now some machines which are supposed to be running 24 hours, some companies say, I will provide depreciation by the hour. That means it also means that the IT knowledge of the background can be defined in terms of hours. And if it is not defined by hours, that is supposed to be given out to you in your IT incident report. And that means that aspect of information that is coming out from the IT system is erroneous. And if it is erroneous, then the IT team can only tell you where you need to focus on, where the output is coming incorrect, so that you can focus your energies on the right area. And basically using better technology, better tools, better innovation for us to go and identify areas on where to go and focus hard and do it. Somewhere in one of my debates with another person, we were debating to say, we're directionally moving towards the point to say that audit is no longer earlier you say audit used to be like laborious job, you need to go and test everything, intellectual job. But I think nowadays audit is coming down to becoming a science. Audit is coming down to becoming an art. You need to really go back, understand the overall system, design your procedures in a manner that you try to identify a maximum number of possible errors in the company's financial statements, and only if it passes all the checks, then you come back and do it. Somewhere in your procedure, if the design is gone incorrect, in the manner in which you have envisaged, you have drawn a story, this is how I'm going to be doing my audit plan, and if the design has gone wrong, then what output you get off it will not be at the desired result. So I think a lot of time I would encourage everyone that this is where we need to go back and spend a little bit more time. And I think on the IT system, spending after we've all got the experience, spending 3-4 days just on IT system is worthwhile the learning even for all of us, even irrespective of the experience that we may have gained, because business drives, technology is driving business, business is driving the auditors. So we come third in the line. So it means we need to be that much more sharper, that much more faster to keep up pace with technology. So the step 2 is then you identify the characteristics where you need to do the testing, identify the risk, and then last is you then go and test the IT environment. Only after doing all these steps will you come back and say that yes, have I actually passed my test for me to go back and place lines on it or no. So there's something called as IT deficiencies. So all of us would be aware of the IFC report we need to issue, yes or no? I know we're coming to the end of the session, I just have 2 slides and then we'll be done with it. IT deficient, IFC report or ICOFA report. How many of us do actually issue it? We do issue it, yes or no?
Yes.
Yes or no?
Yes.
My wife, okay, I'll ask 3 times now, then I get a response. Right? So again, now if you identify a particular IT deficiency, which is information technology deficiency in your testing, as an auditor, it's also become important for us to assess whether that will have a negative impact on our ICOFA report or not. Because let's say if the depreciation computation is all automated and we have identified an error in that, like your example man you gave, where let's say revenue from the sub-billing register is not marrying with the books over there. And if the company is saying my IT system is working fine, but you found out an error of 80 lakhs, or 80 lakhs, assuming it's a material impact to your financial statements, should you be qualifying the report or not? So again, we are only going back to the fundamental point that testing of IT systems is important, because not only does it impact the financial numbers, as an auditor, I have a responsibility to also comment whether the ICOFA report is also appropriate or not. And this is whether I have passed my DISA exam or not is not relevant, because insurance authorized the chartered accountant that if you are the pass the CA exam, you will sign the report. So we need to apply our judgment and say who all we need to scope in to help us fulfill our responsibilities earlier. And that's why it's very important scoping the IT application to be tested, identify which one needs the financial reporting implication. We test those systems. If there are deficiencies, we put them in a concept called an audit impact table. From there, we then design and say, these are the additional audit procedures I want my team to go back and focus and test on to identify any errors. And then lastly, we say if some of the IT controls have failed, does it have an impact on financial statements? Yes or no? Maybe the team will test and tell us, okay, yes or no, any adjustment to be recorded, we do it. But if the controls have failed, irrespective whether we have got an adjustment posted in the accounts or not, if it's the material deficiency, it should find its place in the ICOFA report also. And even in all the NAFRA findings that they are doing, everything that they are picking up, they are saying, please show us a trail that you've done the evaluation of all your deficiencies and your recommendations onto the financial statements and also to the ICOFA report or not. And the moment you do not have the full trail established, they are saying this is what the standards of auditing want us to go back and perform and do. So that's the point that is being highlighted, which is evaluation of control deficiencies template. So this is the end summary. That's the end of, I think, what I wanted to achieve from what little knowledge I had. I'll probably leave the floor open for about 5 minutes to take any questions if anybody has. Yes, sir.
So in case the statutory auditor is also DISA qualified, is there, in case the statutory auditor is also DISA qualified, is there any restriction on the statutory auditor being also appointed as the IS auditor?
No.
When you say IS auditor with the full form?
Auditor of the information systems. So if the statutory auditor is DISA qualified, can the company appoint the statutory auditor as also the IS auditor? Of course, somewhere I think in the course of statutory audit we do carry out a test of that, but not in significant detail though.
So let's answer the question in 2 parts. As a statutory auditor, if you're also a DISA auditor, you do the basic test for an audit. There is no restriction on that. Now let's come down to the system audit. Now, if you're doing a system audit, now if you reflect upon the earlier communication that I shared, the system auditor is giving you a type 1, type 2 report. Now, even for issuing a system auditor report, the auditor over there has to be independent of the company. So, that person in this kind of an example that we're trying to debate, answer is yes, he can do both the audits. But if management says, I want you to come and do this testing of my systems for my own purposes, and I will use this finding as a part of management control testing, then it becomes a conflicted approach. Because we cannot replace an auditor's effort as substantiating for management effort to what we need to test on controls. Because ICOFAR requires controls to be executed at the client place, controls has to be tested by management, and then it has to be tested by the auditor. So we are the last layer of the blanket. So they cannot subsume blanket number 2 and 3 together and say it's done by one person. So it really depends on the end output used, but can the system auditor also issue the, let's say, type 1, type 2, SOC 1, SOC 2 type of report? In my view, answer is yes, he can.
Thank you, sir.
Anybody else, any questions?
System auditor is not compulsory.
There is no real defined regulation to say that you need to have a system auditor which is compulsory. So it's down to our professional skepticism and common sense to say, do we really have the skill set within us for us to go and test the systems or not? But then the more and more you become a larger organization, I think everybody needs better assurances, everybody needs better comfort. And I think in that case, a system auditor, while it's not written by law, I think you will somewhere an auditor is forced to embrace a system auditor for him to fulfill his responsibilities.
Companies insist for disqualification as a part of appointment itself.
Could be, but again, they've married the concept that there's only one audit opinion issue.
Should we have a complete understanding about that system? The visa auditor you should pass and put it on an SAP system. You may not be knowing SAP system. We understood the system. That is more important than the qualification. No?
In fact, one of the points I was debating the other day when someone is saying, now if you take a look at actuaries, right? This is a very practical example to how it's probably applicable to us when we're talking of how much experience you have to test system, get the overall big picture. Today, a chartered accountant who is 1 day qualified or 50 years or 90 years qualified. Answer is same in the eyes of the law, both have the same powers to issue opinions, to give whatever is required, right? By law, they have the same power. But if you go to an actuary society, if I get my understanding of the subject right, they've got 3 different layers of exams. In one layer of exam, if you pass, you can do computation of actuaries. The second layer of exams that you pass, you can do certain actuarial valuations, but non-life. And only if you pass the highest exam, are you actually qualified to issue, to do actuarial valuation, because that's how LIC and others get the pricing of their entire products. Let's say for life insurance, they break it down into life and non-life. So only if you clear the highest exam, can you actually go down to not to life. So I think, to your point on, let's say, visa system auditor, depending on the complexity of clients that are there, I think it's time that we also start grading the experience of our profession so that the right minds are being applied with the right experience to service the client. And if it means that visa auditor will be an imperative to this, it could be prescribed over there. But that's a point for our regulatory body to evaluate.
Currently, are there any thresholds which kind of make systems audit mandatory companies? Or is it just a management decision to sort of gain that comfort? Because now, of course, technology is being used, it's across all sectors. And needless to say that information systems form an integral part of the day-to-day operations. So is there any threshold, like say companies having, it could be turnover-based, capital-based, I'm not sure. It's just a very basic doubt what I'm having.
No, it's a fair question.
Yeah.
So I think our Companies Act has defined that the ICOFAR report is applicable to certain categories of companies. So once they say the controlled environment is to be implemented, then our institute guidance note is prescribed as to what are type of controls that a company should implement. They have covered the section around manual controls, and they have also covered the section around where there is IT system that need to be controlled even around the ITGCs and even around the IT automated controls, spreadsheet controls. It's all there.
It's all
so if you're asking me, is it mandated?
It's audit mandatory.
It is mandatory. So the ones Because under the ICOFAR framework, management has to design and implement the framework. Second step is management has to carry out the testing of those controls. And then only third stage would come for the auditor. Now, is it mandatory? In my view, answer is yes, because the fact is, for those categories of companies, the auditor has to issue the ICOFAR report. And if he doesn't issue the ICOFAR report, that opinion is not valid, because it doesn't really meet the requirement of the law.
Understood, sir. Thank you.
Yes, sir.
What is the impact on my audit report if the soft report is qualified?
So if the soft report is qualified, let's give an example in the payroll example that we gave, that the computation of payroll for, let's say, withholding tax is incorrect. But the company has already remitted all TDS on the same basis. So two implications will be there. One is the payout to the employee is gone out is incorrect. Second is that the payout that is gone out to the government is also incorrect. Both sides. It could be more, it could be less, both ways. So that report or that aspect of it will have to be qualified into a report that this one aspect of control is not working appropriately. The second aspect is we will then have to tell the company if they have done an under-reporting or an underpayment of the withholding taxes to the government, then the management will have to go back and regularize this by computing what is the differential and paying it out back to the government, and there will be consequences for late payment of the taxes, because again TDS on the payroll has to be paid on a monthly basis. So let's say from month 1 till month 11, if there is a delay, you will have to pay the delayed cost on that with the interest. There are consequences of this. Now whether we go back and qualify a report or not, I think that's where the materiality concept will come into picture. Now if this error is, if the impact is very material, but if it's been corrected, then maybe you could give a clean opinion, but your ICOFAR opinion could be modified. Great, if there are no other questions, with your permission, we'll draw this to a close, and if there is anything that you may have any questions, my coordinates are there, please feel free to reach out. A big thank you for your patient hearing, I hope you found it useful. Thank you.
Good evening, members. On behalf of Bangalore branch of SLC of ICI, I would like to take this opportunity to express our heartfelt gratitude to CA Jain and Manish Bathija for this insightful and inspiring deliberation today. Your expertise on auditing technology tools and analyzing its impact on audit has provided us with valuable knowledge and a new perspective. We appreciate the time and effort you took to prepare for this session, sir. Now I request CA Manjunath M. Hallu, Chairman of Bangalore branch, to kindly hand over the memento to the speaker as a token of gratitude and appreciation. Thank you, sir. Thank you all for being here and have a wonderful day today. We have one announcement. We have half-day seminar till 30th June. In case some of members need to complete their CPRs, kindly register in advance. Thank you.